Hello everyone, this is Macro Market FX, and in today's video we are going to discuss about how to read the COT, meaning that how you can read the COT and directly use it on your forex trading. So in this video will be on different phases. This let's call it a part one video. So in today's video we're going to look how you can read the COT data and how you can implement these COT reports to your trading style. And I'll show how do I do it personally. How do I connect the COT reports and engage it to my forex trading. So let's start by looking at what are COT reports. COT reports, these are reports which are which companies are supposed to give to the commodity futures trading commissions, which is normally on every Tuesday. But this report you get them on Friday around 3 o'clock Eastern Standard Time. It varies from different times according to the country which you are. So this report shows how the large banks, large speculators place themselves on the market. I know you can you think that is an easy thing. Yes, it's an easy thing. You get to know how these large players, how these large movers, market players position themselves through different areas. So let's take a look. This is the website called Commitment of Traders. Let's call it the CFTC, Commodity Futures Trading Commission. So we here you go to find the commitment of traders. As I said before, when you reach the commitment of traders, we scroll and look for something called the Chicago Mercantile. Here it is, Chicago Mercantile Exchange. Then you go to the short format. Then you go to the short format. The short format. This is a short format. You see the date which this report was on, fifth of August 2025. But this report normally comes on eighth. Let's say every Friday, which on every Friday it was 8th of August. 8th of August. So this, as I said, this you see here, futures only position. There are many commodities, there are forex futures, everything you see here is crude palm oil. You have got everything, rubber, you've got milk. So let's take a look at the livestock. We have got feeder cattle, cheese. Let's study a Canadian dollar. This is what we'll be looking for. Canadian dollar. How do I take these reports and use it to analyze to help me to analyze and to get into my forex trades. As I said, yes, Canadian dollar, and there are three sections. There is non-commercial, there is commercial, and there is non-profitable position. Okay, what's the meaning of non-commercial? Non-commercial, these are the large speculators. What I mean by large speculators, I mean the big banks, I mean the big FX institutions, the big institutions. This is what I mean of the non-commercial. Okay, the commercial is normal like companies. Companies may use this normally use this transaction if they need to do some payments. For example, a company has an office or maybe in Australia, so they need to do payments in Australia, so they must consider the exchange rate. So maybe a Canada company is based on UK but has got an office in Canada, so they have got to pay their employees in Canada, so they use this opportunity, this exchange rates in order to pay their employees in Canada in the Canadian dollar. So these things. So you can see, as I said before, there is long, there is short, there's commercial, there's long, there is short, and this is the last one. Is, as I said, is not reportable positions. What does it mean? These are the normal traders, as retail traders, as me and you. So I'm going to show how you must position ourselves how the big banks do, the large speculators, I mean, because when you position yourselves as these big fishes do, these big dogs do, you the risk of stopping out of the market, the risk of losing your capital, reducing it, this is going to be very small because you are doing as how they do. You see, like for example, let's take a look at maybe the Swiss franc. The Swiss franc. You see, this there are a lot of numbers, there are a lot of contracts, and I know a lot of people are not good in numbers. I know that. So I have found a way. I've got this website called the COTBASE, COTBASE.com. This website helps us to compare these numbers. all these numbers here in a way that you will help you to understand. But in my side, I do understand these numbers, but I've found this website which is going to be a very easy way of you to understand these numbers, because I know most people are not good in numbers. This website is called COTBASE.com. COTBASE.com. So this web here is the website. This website it has got a free version and has got a the premium version. So let's look at this. So for example, let's look at the Swiss franc. Swiss franc, you know what the Swiss franc is. So what are the large speculators doing at the Swiss franc this week? This week the large speculators they they are they are continue selling the Swiss franc, meaning that they are continue selling. As you can see, this green line here is the large speculators line. This red line here is the commercials line. Commercials line, as I've said earlier. Okay, our main focus, we are looking at the green line, the large speculators, because these are the big moves of the market. What they are doing, this zero line here means when this green line is above the zero, means that they are buying, the official buying this currency. It means that there's a lot of liquidity poured into this currency. There's a lot of cash poured into this currency. By current line now, you see they are selling this, they are selling the Swiss franc. And you can see according to this week, they have reduced their positions from 24 from 24 24,000 negative to currently right now it is at negative 28. They continue selling, means that they continue selling this. There's the Swiss franc. They know the Swiss franc, yeah, the Swiss franc futures, as you can see here. Okay, but if you could look to the if you could look the commitment of traders, the chart, and know that the numbers short, long, it could at least make you not understand. As you can see, large speculators, you see this week here, this is the graph here, you see long here, the amount is 6,000, 6,000, 6,000. Short is 34, 34, 34. You see here, 34,000. So but I know a lot of people doesn't understand numbers. That's why I've used this chart. See, this chart shows you already that this week there was that here, this week they continue reducing their yes, it is around here 34,000. Yes, 34,000. You see, so this shows you it enable you to understand more, because some people those that doesn't understand numbers. So you are very okay. Let me show. Let's do the first approach. Oh, as speculators, they are selling the Swiss franc. Okay, fine. So let's look at like another pair. Let's maybe look at the JPY. Let's look at the JPY. What the last speculators are doing on the JPY this week? What were their positions of this week JPY? Okay, non-commercials. I say non-commercials, commercials, and what we are doing here. Okay, let's look at the non-commercials. Non-commercials means that the large speculators added their positions was 160,000 position positions. They are long, means that they are buying, while they are shorting 78,000. So you can look to the chart, because these numbers are, you must, they are complicated. Some people doesn't understand, or some people doesn't know how to convert this number into an Excel spreadsheet. So that's why you're going to use this website. So let's take a look at the Japanese yen. Japanese yen. What is going on with the Japanese yen? Okay, you see the Japanese yen. Yeah, see, as I said before, when the number is above the zero means they're buying the Japanese yen, and they were above, and the large speculators have been buying the Japanese yen since January, since February. They're above the zero line. Yes, but now they are reducing their positions on the Japanese yen, but they're still long, guys. They're still above the zero, means they're still bullish on this pair. Yes, they must be reducing their position due to week in, week outs, due to maybe several fundamental cases, such as the central bank policies, such as the inflation pressures or various tariff issues, but they're still above the zero, means they're still bullish on this pair. You see, they're still bullish on this pair. Still bullish on this pair. They're still bullish on this pair. As I said earlier, you can see here they're still bullish on this pair. So how will I use these two analysis to my on my maybe if I want to trade this pair. So let's take a look at the Japanese yen. CHF. Let's look at the CHF JPY. This is the CHF JPY, guys. CHF JPY. Okay, I have noticed that Right now, the largest the big market players on the CHF JPY, they are there's a strong buy compared to this to them. There's a strong short on the, let's say there's a strong buys on the Japanese yens compared to the buys on the Swiss franc. You see, so what will it mean? That when this pair will be looking for a sell position, mean that the large speculators are more bullish on the Japanese yen compared to the Swiss franc, compared to the Swiss franc. As you can see here, the Japanese yens are long. You see, 160k. Let's look at the Swiss franc. Swiss franc. How are they long on the Swiss franc? Swiss franc. Swiss franc. You see, only 6,000 they are long. So you see the Japanese yen, they are more long on the Japanese yen compared to the Swiss franc. You see, there's a big variation, 160k to 6,000. You see, so there's 154, almost 154 contracts long, strong compared to these two currencies. So what will it mean to the market? What will it mean to the market? Mean that there's opportunity on selling the CHF JPY. There's other factors which govern other factors. I'll talk about it in my next videos, but let's look to just how I align the COT reports on my trading and how I keep it on my trading position. So you see here, currently now the Japanese yen was in a price of 185k, and currently now I start pushing down due to what is happening on these large speculators. Mean they are long more the Japanese yen compared to the Swiss franc. So what will lead to the market? There's a big sell off which is creating itself, and it start going down. That's what you see here. That's what you see this week. Take a look at this. What happened? This the last week. You see, there's a lot of movement, and the price have reached to the to the calculated moving average around here, where it is stalling here. It is stalling here, and what were we expecting here? We're expecting a continued downside in this movement due to the Japanese is strong in the market. According to the reports, the Japanese is still strong compared to the CHF, compared to the CHF. So what will it mean to the market? Mean that there's a big sell-off on the CHF JPY coming. A big sell-off on the CHF JPY coming. So that's what you see the market has started selling off, has started selling off. So when I see things like this, when I align the COT reports and I come to my trading, so I'm saying officially this pair, I've sold this pair, I've sold this pair, and I'm selling it way down because due to the camp, the first the large speculators are on my move. So the risk of me getting lost, the risk of me holding a trade over the long run or a loss over a long period of time is very small because I'm following what the big banks are doing, what the big banks are doing. So if you know what the big banks are doing, it will help you grow your capital, reduce risk. This is the main thing. The main thing in the forex market, first you must know how to reduce risks. Means that you must know capital preservation. And the second thing is to grow your capital growth. So this is what I'm doing. So this is this pair. Let's look at maybe one last pair. Let's look at something maybe. Let's look what happened. Let's look at the most one of the most traded pairs. Let's look at the Euro USD. Yeah, let's look at the Euro USD. Euro USD. Let's look at the DXY. Yeah, Euro USD and DXY is the same thing. Yeah, USD also on my last videos I made a video concerning the USD. I'll keep the link on the video description. Take a look at it. This is USD, guys. You have been buying the USD since March. You have been buying this pair, and I'll take profit of 120, 1.120. This is our main take profit on the USD. This is due to what the large speculators are doing in the market, and also the macro, the fundamental approach. But today I'm going to look only on the COT report approach. So let's take a look at what they are doing in the market. Let's take a look at the COT base. COT base. Let's look at the euro. Let's take a look at the euro. Okay, here's the euro. See the euro, guys, as I said before, when price is above the zero, means that the large speculators are buying this pair. And euro has been the large speculators have been long on the euro since March, since March until now. They're still long on the euro. See, so what will it mean to the market? That's also a big upside on the euro since March, and I have told you that I have been long on the euros since March. since March. You see, I've been long on the USD since March. So what expecting? Large speculators were long since large speculators have been long since March on the euro. Also see a big upside on the euro. Okay, and currently they're still long on the euro, though they have this week they have slightly reduced their long positions, but they're still long. Means that there a lot of capital inflow is in the euro. Okay, let's take a look at the US. Let's take a look at the USD. Let's take a look at the USD. Take a look at the US. Okay, this is the US. Okay, so what were the large speculators doing? See, the large speculators they are selling the DXY. Means if let's say the US index, also the US, they're selling the US. You see, they've been selling the US since official. They've been selling the US since April. Since April. Well, they started official. They started selling the US since, let's say, since March. But they were still above zero. But they were reducing their long positions. Their long positions. So what will it mean when they were reducing their long positions on the US, while the euro they are increasing their buying positions. What did it mean? In that the USD was being an uptrend. See, and now the official short on this pair below the zero. They're short on the USD future contracts. So, and this week they've continued, they've continued shorting in this pair. So what will it mean? That's why you saw a big upside on the USD throughout the beginning of the year. That's why a big upside on the USD. This was because of the factors of the large speculators. Large speculators. That's how I've said in my previous video that we are continue buying the USD. Our take profit was 1.20. 1.20. So guys, the large speculators play a big role in the market. That's why I see whenever I want to enter a trade, I must look at how the big players they're doing. I must look at how the big players are doing, how they're positioning themselves. If you know how this position themselves, you'll have a good you have a good benefit. You have a good benefit. Not only you reduce risk, as I said, the main theme of the forex market is to reduce risk. Okay, you look at the USD dollar index. You see, they reduced. It was a big sell-off due to what they're doing in the market. The large speculators were selling the DXY. That's also a big sell-off on the euros on the USD. A big sell-off on the DXY. Okay, that's why it's it for today. So thank you everybody. Please keep on liking my videos, keep on commenting my videos, and thank you.